In this edition of INN CEO Talks, we are at the Vancouver Resource Investment Conference, and I'm joined by Jan Alston, President and CEO of CMX Gold and Silver. And yes, we are talking about gold and silver. Jan, welcome.
Yes, thank you, Stu. Glad to be here.
Nice to see you again.
Likewise.
You know, even though we've talked before, not all viewers will have a sense of the history of the company. Tell us a little bit more about CMX.
Well, the key asset that CMX has is the Clayton Silver mine, which was a former producing silver mine down in south central Idaho. And we acquired it a while ago. You know, you have to be very patient in the mining game.
Very patient.
Picked it up pretty much at the top of the last cycle, but we kept it in good standing. It's unique in that it's patented claims, which is really like real estate. So the mine itself, I mean, we own the surface, we own everything, and we don't have any costs other than property taxes with holding that. So a bit of a unique asset that way. I mean, it's a historical silver mine. It's in Custer County. Was at one point one of the larger silver producers in that area. Most of the mining was done between probably the 1950s to the 1980s. It was never mined out, so that was what attracted me to it, because it's great to look for mineral resources around where they've already been found and mined. So because it was mined out, it's you know, it's open in all kinds of directions, to depth, to north, south, you know, all the good things that you need. We've been very patient because the commodity cycle has been sort of long and drawn out on the downside.
Yes.
But we are really excited now because we can see that all the pieces are sort of falling into place for, I think, a very, very positive environment for all commodities, especially metals, and of course this is a silver mine, so I've been really keyed on to the dynamics of the silver markets.
So is that what's motivated you now to go out and stake new ground?
Yeah. Yes. I mean, well, I think it was really we're starting to move forward with the project in a bigger way. We want to do some drilling, and it made a lot of sense to go out and stake around those patented claims, because these sorts of deposits, when they're set up, it's not a stretch that there will be similar vein structures, you know, that might be parallel to the ones that were mined in the old days.
Right.
And it sort of ties. So adding to the land around it ties into our view that this property was never really explored, because in the old days they just started following the veins that were expressed at surface and sort of went where they took them. And it's not that we're smarter today, but they never pulled back. They didn't really do geophysics. They never did any sort of exploration drilling. I mean, there was a little bit back in the 60s, which actually found, you know, high-grade intersections several hundred feet below the mine workings, and it's, you know, still there waiting for us. So it's very prospective in that way, and so we want to get in there and start to drill around the known ore bodies that weren't mined out, which should be, you know, pretty low risk, and then just sort of expand from there as we go.
Well, you brought up the topic of low risk. So often people are looking at, you know, early stage or junior mining companies and go, the risk. But you say that that's not the case here.
Yeah, exactly, and it's really because, again, you know, it was a mine, so we don't have to play the odds of, you know, trying to find one, and it wasn't mined out. So, you know, for example, when it shut down in the mid '80s, early 1986, on the north ore body, they blasted a whole bunch of ore underground, and they only took out maybe 40% of it. So there's several 100,000 tons of good rock, good ore. I mean, you know, it was ore, they were mining it, had a mill there, and, you know, we're making their concentrates. And so that's still sort of waiting to be had, you know, and that would come later once you prove up other resources around there and decide on the size of the operation, kind of the size of the mill. But so that's kind of like I guess the insurance for our investors is kind of like, and we're early days yet, so we don't have a lot of investor activity. But what I would like to encourage people to do is to kind of look under the hood, or maybe better, look under the share price and look at the asset that we have, and then investors can compare that to our market cap, and and sort of start to maybe look at, wow, there's a lot of upside there. It's kind of a bit of a secret. It's not out there yet, the story. And for the patient investor, they can get in and they can acquire stock at a good price and be patient while we move forward with the project.
So what's the most important bit of news that they should be looking at over the next 3 to 6 months?
Well, the most exciting opportunity in the nearer term was that with these historical mines, there's a lot of rock that is low grade. And so they mine it, and if it's not of sufficient grade for the mill, they pile it in a stockpile. And because of the history of this mine, it operated quite a bit for 50 years and a lot for 30 years. Mm-hmm. We ended up with what we think is at least a 1 million ton stockpile of unprocessed rock. And several years ago, we went and did a fairly extensive sampling program. We took 3,000 kilograms of samples, very random, trenching and backhoes, and wanted to try it as best we could, give us a representative idea, grade of what might be in the stockpile. And one of the surprises was we came up with 0.8 of a gram per ton of gold. And this wasn't really, there was very little gold produced from the records that we could tell in this mine. And so we've always thought, well, that's quite a bit of value. There's also silver there, and zinc and some lead and whatnot in the stockpile. But the intriguing thing is the gold. So last spring in 2022, we were approached with a group out of Surrey, an engineering group, ABH Engineering, and their Sulphide Remediation Inc. affiliate. And what they do, they're specialists in ore sorting. And ore sorting is a technology that's been around for probably 30 years. But with the advent of high-speed computers that can process data and the software programs, they've developed now this technology to a point where they can crush the rock and put it through their system, X-ray it, and pick out the rock that has metals in it. And it's fascinating, really, and it's a huge opportunity for us, because with the low grade there, we can't really ship it to somebody else's mill because of the trucking costs, right? So the ore sorting, they call it the dual X-ray ore sorting technology. The one that this group likes is Tomra, which is a Norwegian company, and they're a world leader in sorting all kinds of things, metals and even recycling and everything. So what this group did, we signed a deal with them that they'll come in and they'll set up the system and operate it. We'll share the operating costs, but then we'll split 50-50 the profits. And the technology has the ability to increase the grade by getting rid of the barren rock. Right. They use air jets and everything. It's quite sophisticated, but it works. And up the grade between 6, 8, 10 times. So we have an opportunity to, say, early next year, start to get some cash flow out of that stockpile, based on what we've sampled and the sampling we've done, and applying the ore sorting technology to it.
What's your long-term strategy?
Well, after the ore sorting confirmation, because I should just probably fill in there, the group came in, the engineering group, and they took 500 kilograms and they shipped it off to Tomra's test facility in Sydney, Australia. So we're just waiting for the testing of our rock and how it works, and it should work reasonably well. It's the kind of rock and materials and mineralization that this works for. So once we have that, then we'll get a picture of the timing and we can start to develop some sense of the cash flow that we can get from that stockpile. But the real long-term win for our shareholders will come from drilling and proving up, substantial resources around the old mine and the old ore bodies.
Do you have the resources that you need to be able to carry out that drilling program?
We don't. So that's something that we will work at. One of the challenges as we become informed on the ore sorting possibilities and how well it will work is that it could generate a lot of cash flow that we could use for drilling.
So you may not have to go back and raise money. Okay.
We're kind of being patient to see where that leads us, because a lot of our long-term shareholders are saying, well, don't keep issuing and diluting shares.
Right.
So maybe there's something in between so that we can get interest and realization in the marketplace of the potential of both the stockpile and the underground potential. And then we could do some fundraising to start drilling, because we really would like to start drilling this year on the property, because again, talking about the backdrop of the silver markets and the commodity markets, I mean, this is the time to get active. So
based on where you're at, it may be a little too early to tell for sure which way you're going to go. Are you looking at mine development and staying with the project, or do you envision that you'll bring in a joint venture partner or even possibly vend into a major?
I mean, I think we're not afraid of operating. I mean, I had my junior energy company, and we were an operator, and you can find lots of talented people to work with,
Mm-hmm.
But I think it kind of makes sense that if we can prove up some reasonable resources there and then attract a larger junior or an operating junior, or even a mid-tier, doing some sort of deal with them, or even selling it to them. I mean, there's nothing wrong with that, and capturing that value for the shareholders.
Pretty interesting time to be in this marketplace, though, isn't it? Like we're seeing this rebound, as you say, in the commodities market, and being a domestic North American supply also plays an important role.
It does. We're here at the the Vancouver Resource Investment Conference, and there's been some great panels and speakers. What's been very exciting for me is that I've really been learning a lot in 10 years and focused on the silver market particularly, and seeing that the dynamics of supply and demand are looking very favorable to price increases. And it's great to have people who are very successful and very informed, very knowledgeable, speaking at these panels the past 2 days, and basically confirming that yes, there's a disconnect there that the investment community hasn't really got their heads around. They're really not paying attention. Mm-hmm. I mean,
especially to silver.
Well, silver's particularly interesting because the amount of silver produced in the world annually is perhaps 850 million ounces. And then 70% of that is byproduct from other mining, mining other metals. And the thing is that now, I think last year, 200 million ounces were used for solar panels. So the world wants to go green, and that's not just silver. It's like lithium and cobalt and like rare earth metals and things like that. So we're not going to be able to get there with the low levels of investment that we've had in the mining game for the last 10 years.
Right.
And some of the speakers are quite bullish on the juniors, really, because the juniors are the explorers. And the major mining companies for at least 10 years moved away from exploring. So it's going to be very, very exciting, because I think that, particularly for silver, there's going to be a shortage. I mean,
Yeah, and I think you're right. Here at the conference, there is quite a buzz on the floor. It's dramatically different from where it was a year ago. So
yes, and I think what will happen is that, I mean, the governments around the world, I mean, rightly or wrongly, are pushing in the direction of going green and electrification of the economy. It's going to take a huge amount of mining to do all that. Right. Whether it's the turbines or the solar panels, And so, and it's going to take a lot of metals to do that.
Well, and particularly here in North America, there is, of course, wanting to secure that domestic supply.
Well, that is an issue because I think we're not paying attention in North America, or maybe even the Western world, because gold and silver have been going to other places, and that's a fascinating thing too. That it will underpin the commodity cycle for silver, in particular, is that the silver inventories around the world are being used up, or being taken up.
Right.
They're not at the COMEX anymore. They're not in London, with the LBMA. So it's going to be interesting if investors start to want to get their hands on silver.
Mm-hmm.
Like, where's it going to come from? Especially with all this demand for green and even in EVs, in electric vehicles, they need silver for electronics and everything. So it's kind of a sweet place to be, I think.
That is a sweet place to be, and I hope you're going to come back and give us updates in the future, because I think you are in a very sweet spot.
Okay, yes, well, glad to do that.
Great, thanks.
All right, thanks, Stu.